Happy Friday, everybody. It is March 6th. Markets are on fire and not in a good way, guys. It is a dumpster fire out there. This is going to be an awesome show. We're going to be talking about what's going on with oil, how we can actually play this in the market as a resolution comes. Inevitably, oil prices come back down. I'm also going to talk about the history of the US dollar, which I've covered at different times. It's been a little while since I've covered the history of the US dollar, but I think everybody should understand it because, A, it's very important to understand how the US dollar became the global reserve currency and where things stand today, but also has a huge impact on what we're seeing with gold right now. I'm going to talk about this current conflict and how that plays into what we're seeing with gold. I'm also going to talk about why we're seeing crypto dump with some of the reports we've seen, and we're seeing a slightly different reaction than what we've seen over the last year when we see these types of reports. I'm going to also talk about an AI agent in particular I think could be really undervalued at the moment, and then do a full DeepIn update. So, man, it's going to be quite a show. Hopefully everyone's having a fantastic week. Woo, Bobby said he's locked and loaded. Love it. This is the highlight of the week. History lesson, man. We're not ready to shut off the brain yet. I know it's the weekend, almost. You got to stick with me, though, for like the next hour or so. I promise it'll be worth your time, guys. There's going to be some really good, valuable information shared today, okay? Put a lot of time into prepping for this one. I'm super excited about it. Oh, all right. Let's get into it, though. This, of course... Oh, let's get it up there. That's right. This, of course, is the story of the day, has been the story for some time, and this is the Strait of Hormuz. This is something I covered really back last June and posted about earlier in the week, but this is where 20% of the world's oil travels. Right now, it's effectively shut down, and this is causing oil prices to spike, and we're seeing a huge impact across the board in markets because of it. And, of course, this is what we're seeing with the price of oil. Woo, that is ugly, guys. It's not good. Okay, up 42% over the last month, but you see this. This is what we want to see with our investments. It's not necessarily what you want to see with oil, unless you have exposure, and we'll talk about that. Of course, we then had this statement from Trump. They'll drop very rapidly when this is over. And if they rise, they rise. But this is far more important than having gasoline prices go up a little bit. Okay. Well, you might not like that statement, but it is true. As this thing gets resolved, oil prices will come back down. So the question is, how can we use that to our advantage? How can we make money off of that situation? I'll tell you, I knew that oil prices would go up, but I was looking for ways to play it. And I played Chevron, and it hasn't gone super well. It's not down, it's not up. It's just not really doing anything. And it reminds me of that meme where the dudes with the stick, like poking Chevron, like, do something, dude. It's not doing anything. It's a little frustrating. My thesis behind this was correct in that oil prices were going to go up. We are sitting here at this all-time high from back in 2023. I'm like, man, if we break through this, we could be off to the races. Sure enough, we just haven't done it, right? And you have to think, a little bit of a background to this is that we've now taken over Venezuelan oil and Iranian oil. China was relying on those sources for like 17% of their oil supply, which is now effectively cut off to them. They were buying that in the black market because those are sanctioned countries. So they're doing it outside of our international payment system, SWIFT. That's how we generally put sanctions on these countries, is we don't allow them to use the SWIFT payment system. We've done the same with Russia. So the concept here is like, well, China's got to go somewhere. If they go to Russia, it means that someone's going to have to go elsewhere, and that's probably India. They're probably going to have to buy from U.S. Thought that would bode well for Chevron. It's up slightly, but not really materially, which is really, really unfortunate. So I started looking at other ways to play this, not only to prepare for the next time we have conflict like this, which inevitably will happen, but how do we play this as the market responds to this coming to an end, right? At some points, we will have a resolution and oil prices will come back down. Well, you have this. This is the way to play it on the way up. This is it's called the UCO It's a 2x leveraged ETF that tracks the price of oil. Obviously, you can see since Friday, this thing is up like, I don't know, 50%, something like that, 35, 40%, I guess. So this is a great play on the way up. There happens to be a short, though, that does the exact same thing in the inverted direction. So this is something I would be looking at right here. This is SCO, the ProShares Ultra Short Bloomberg Crude Oil Fund. So obviously, inverse relationship with the price of oil. As oil comes down and we start to get a resolution here at some point, this should skyrocket back up. Okay, it's inverse to the price of oil. So this is one way to certainly play it as we see a resolution. The other thing you should be looking at are airlines. Airlines are very tied to gas prices because their fuel costs are one of the biggest expenses they have. And you can see here, this is United Airlines, fell off a cliff after we moved into Iran. Southwest fell off a cliff as oil prices went up. Obviously, as oil prices come back down, I would expect that we'll see these stocks bounce back. But there's another way you can play this, and this is actually through an ETF that tracks a bunch of different airlines. So you can see this one has obviously dropped significantly since we've been in this Iranian situation and this conflict in the Middle East. This is something I am certainly going to be looking at as we come to a resolution, getting exposure to this, because we should see it move back in the opposite direction. And in particular, this is what the exposure is to. You have Southwest Airlines, Delta, United, American Airlines. So you have a number of different airlines that you get exposure to through that ETF. Of course, that is, again, Jets. Not to be confused with Jets Pizza, which is freaking phenomenal, by the way. Detroit-style pizza. I love it. But all that said, airlines, shorting these oil ETFs, okay, those are two clear-cut ways to play this as we have a resolution. Now, the question is, when will we have a resolution? Well, interestingly enough, the Strait of Hormuz being shut down, a lot of it comes down to insurance. These different tankers are not moving. It's because it's too risky. And the private insurance companies are telling them to stay put. Well, Trump just announced this like an hour ago, that the administration is going to announce a $20 billion reinsurance program for oil tankers and vessels moving through the Strait of Hormuz. Okay, so the U.S. government is stepping in to insure tankers in the Strait of Hormuz. It's worth noting that 85% of that oil is going to Asian countries. But I think it's pretty obvious Trump does not want oil prices up. Okay, it doesn't matter what he said earlier. If it goes up for a little bit, so be it. This is a big problem for him for a lot of reasons. And if you haven't seen the stock market today, you'll see why. I'm going to talk more about that as well, and how oil and the correlation there and the job numbers that came in today are a lot of the reason why we're seeing this big sell-off. But of course, the other thing you can keep an eye on here is the prediction markets, man. We talk about this all the time, right? So when will the conflict end by? You'll see here, people were pretty optimistic early on. Now the expectation is this can be drawn up for some time. 46% down on March 15th. So a lot of people thought this would be resolved almost immediately. But you look down the list here, I mean, it's not likely that we're going to see a resolution until sometime in May and possibly later. We're seeing summer. We're seeing, a lot of internal reports coming out. This could go into September. Of course, if we start to see this shift, and this is something, keep a close eye on these prediction markets, a lot of times insiders get information and start trading on this stuff. So you can kind of play on that, right? If you start seeing a huge shift in the percentage, the likelihood of a resolution, it starts bumping up a bunch. Well, somebody might know something. And then you can start positioning yourself in some of those trades that we were talking about. Some of those, the shorting oil or playing the airlines. The other one you can keep an eye on is Kalshi. When's the nuclear deal going to get done? Okay, I mean, that's not necessarily the same thing, but similar type resolution, right? If we see these numbers start to tick up, that would mean that something is happening. Negotiations are taking place. There's a reason for optimism. And again, we've seen this time and time again. Leaks happen. People make money in the prediction markets. If you're paying attention, you don't have to have that insider information, but you can start to gauge what's going on in these prediction markets and use that to your advantage. So I intend to do that. But that is, from a high level, how I plan to play the oil trade. Now, I do want to talk about things in a little bit more detail as far as the history of the US dollar. And this is really, really important. So get ready to pay attention. This is exciting stuff. I think everybody should understand this, by the way, like especially if you live in the US. The reason why the US dollar became the global reserve currency and why we're in the situation we're in today, with our national debt and everything. Bobby said it's the highlight of his week. Let me go on X real quick and share this because sometimes it notifies, but other times it doesn't. Let me just put this live real quick. Well, why don't you post? There we go. We are live. All right. Bobby, are you familiar with Bretton Woods? Because you're about to be. The Bretton Woods Agreement. So as we are coming out of the World War, this is in 1944, all of the countries around the world had largely sold a lot of their gold reserves, and they'd printed money to fund their war efforts. And international trade had kind of come to a standstill because no one really knew what the value of one currency was versus the other, right? There's really no benchmark at that point. So as we knew the war was coming to a close, all the best financial minds around the world met in Bretton Woods, New Hampshire. And it became known as this Bretton Woods Agreement. And they set out with the goal of determining, okay, how do we create a new global reserve currency? And there were a couple notable figures here. Number one was John Maynard Keynes. Should be in here somewhere. There he is right here. John Maynard Keynes of the UK delegation. This guy was pretty much a celebrity. He was like the most well-known economist in the world. And then there was someone else there named Harry Dexter White. He's not even mentioned in this article at all, which is crazy to me. But those are really the two main players here. Now, there are obviously people that, attendees from all over the world, economists representing all different countries. But this is Harry Dexter White here. And he was there on behalf of the U.S. So it says here, he dominated the conference, and his vision of post-war financial institutions mostly prevailed over those of John Maynard Keynes. So he's kind of an unknown coming into this and was going head-to-head. So, of course, Harry Dexter White's goal was to make the U.S. dollar the global reserve currency. John Maynard Keynes actually wanted to create a brand new currency that would be the global reserve currency. The new World Bank would be based out of London, and it wouldn't be any individual country's currency that would take over as the global reserve currency. Of course, we know how this played out. And the US dollar was selected. And the big reason for this was because Harry Dexter White made it clear that whatever the currency is should be backed by gold. And it just so happens that at the time, the US held more gold than anyone else. And it wasn't even close, actually. So if we look at the amount of gold that we held at that time, I want to say something like 70% of the world's gold. I thought I had it in here. Where is it? Ah, there it is. The U.S. had 75% of the world's gold coming out of World War II, which is wild to think about. Part of that is because these other countries had sold off their gold for their war efforts. The other part is that this is a piece of history a lot of people are unaware of. Back in 1933, Franklin D. Roosevelt issued something called Executive Order 6102, where he confiscated everyone's gold. They were worried. They wanted to force people into the fiat currency system, and they were worried that people would rely on their gold, and they were worried that people would go on bank runs. And as such, they passed this law that you had to turn in your gold. And if you refused to turn in your gold, you were you could face up to 10 years in prison and a $10,000 fine, which in today's dollars would be $170,000. He did everyone very dirty with this too, I should say, because at the time, gold was valued at $20.67 per ounce. And this had been the same for like the better part of 100 years. Right after he got everyone's gold, he changed the value of gold. He's like, by the way, now that I have your gold and I just paid you $20.67 for it, I'm going to revalue all this gold at $35 an ounce now. Can you believe that shit? That's freaking nuts, man. So between confiscating everyone's gold and taken all the gold throughout the war from all these other countries, the U.S. was sitting on 75% of the world's gold. And Harry Dexter White, on behalf of the U.S., won against John Maynard Keynes. And the whole agreement was that the U.S. dollar would become the global reserve currency, but at any point in time, these other countries, let me pull this down real quick, could trade in their U.S. dollars and get gold in return at $35 an ounce. And that was the agreement. And coming out of Bretton Woods, the U.S. dollar became the global reserve currency. A little bit of fun history on Harry Dexter White, by the way. 4 years later, he was accused of being a Soviet spy, which he denied. And later on in the Venona Project, I don't know if you ever heard of the Venona papers, but this is a secret intelligence project that the U.S. conducted really all the way up from 1943 up until 1980, where they were intercepting messages from the Soviet Union. And it was later they were able to decrypt all that. They got the key. And they did find some evidence, but they were never able to actually prove that Harry Dexter White was a spy. It didn't really matter, though, because that same year in 1948 that he was accused of it, he actually died of a heart attack. So 4 years after he was really the main reason the U.S. dollar became the global reserve currency, he actually passed away. Now, this is interesting because we're seeing something similar right now. Countries around the world have been stockpiling messages, that have been encrypted for decades, and they're waiting until they have quantum to decrypt, to break SHA-256, and there would be decades, probably a century worth of messaging, highly classified messages that are going to be unlocked by these countries that have been stockpiling. But regardless, getting back to the story here, we were the global reserve currency up until 1971. And in 1971, and really leading up to that, the US dollar was doing all right. The other countries, though, especially in Europe, were doing really well, but they started to grow some skepticism. And they were worried that the US was printing more dollars than the amount of gold that we had. And France was like the first big one to act on this and almost do kind of a bank run in a sense. And they're like, hey, we don't think you have all the gold you claim to have. We want to trade in all of our US dollars. And Richard Nixon was the president at the time. And in 1971, he was faced with a serious dilemma because France was indeed correct. We had enough gold to back the US dollars that we'd printed within the US, but for the US dollars that were circulating around the world outside of the US, we only had enough to back. Well, here it is right here. Let me pull this up. Of the $14 billion that were circulating globally outside of the US, we only had $3.2 billion in gold to back that. So as you can see, there's a big problem. We did indeed, the US, printed a lot more dollars than the amount of gold we had to back in. We didn't think anyone would call us on that bluff. And unfortunately, they did, right? So Nixon was faced with a very difficult decision, because if every country started to trade in their US dollars for gold, the dollar would be exposed, the US government would be exposed, and the dollar would have collapsed. So, of course, on August 15th, 1971, we had what was called the Nixon shock. And a shock it was. This is when Richard Nixon went on primetime television in the US and announced that we are no longer going to be backing US dollars with gold. And he did not tell any of our international partners this announcement was coming. And you have to imagine all these countries had basically built their entire economy based on the fact that they could trade in US dollars for gold, and that was broken like that. So a shock it was. And we had some seriously strained relationships with our partners around the world, if you can imagine. Nixon spent much of he did get reelected, by the way. This is like going into an election. He had to make a drastic move. This move was very popular amongst people in the US, but internationally very unpopular, as you can imagine. So he spent a lot of the beginning of his next term trying to rebuild these relationships with other countries. And then the big question was like, well, who's the global reserve currency at this point? The US dollar got bailed out. And that's because the US dollar was chosen to be the petrodollar. So international oil trade was done in US dollars, and this saved the US dollar after the Nixon shock. Of course, the big caveat now is that we didn't have to have gold to back the US dollar. We could print as much as we wanted. There's no checks and balances there. And that's a big reason why we're in the situation we're in today. And it's important to realize, by the way, because it's 2026. Yes, 1971 was quite a while ago, but it's only been since 1971 this experiment has been going on where there's no gold backing. And the US government can print as much as they want. We know what's happening right now. I mean, it's a runaway train. You look at our national debt. But here's why it's so important for the US dollar. And I want to tie this into what we're seeing right now with the strength of the dollar, what we're seeing with gold, and with this current conflict with Iran. I'm going to show you how it all comes together here. But, with the petrodollar, global oil trade has been done in US dollars, and this is again since the 1970s. A lot of times, these oil trading countries, because they have extra US dollars they're sitting on, they use it to buy US treasuries. So it creates demand for our US treasuries. That demand in US treasuries pushes our rates down, strengthens the dollar, also increases demand for the US dollar. So all these countries are forced to hold US dollars. So again, this cemented or re-cemented the US dollar as the global reserve currency. And this is why we have this constant ebb and flow right now. And you have BRICS, Brazil, Russia, India, China, South Africa, talking about de-dollarizing. You have Russia and China that started to do oil trade outside of the petro system and their own currencies. You also have the situation with Iran and Venezuela. So we took over their oil supplies. They couldn't use SWIFT because those countries were sanctioned. So the US dollar is not being used in those oil transactions. It was being done behind the scenes in the black market, and China was buying it super cheap. So you can imagine now that we've stepped in and we've kind of taken that supply away. Well, conventional wisdom would suggest that means there's going to be more oil again through the petro system. That creates demand for the US dollar again. And I think that's a big reason why, if you look at the conflicts, this is DXY, and this is the measure of the strength of the dollar against a basket of other currencies. This is back at the beginning of the year, and we went into Venezuela, the dollar strengthened. You see right here, coming out of this weekend, the dollar strengthened. Okay. There's a few different reasons for that, but I think a huge reason here is the fact that Venezuela is the largest oil supply in the world. We've effectively cut off China from buying that oil. And the same thing goes with the current Iran situation, right? So in both cases, we've seen the US dollar strengthened. This is an inverse relationship with gold. In fact, if we look at the gold chart here, we saw this drop right here. This one right here was right after we moved into Venezuela. Okay. We saw the same thing right here. This is coming into this week. DXY increased, gold prices decreased. And you can actually see the events here. There's a very inverse relationship between the dollar strength and gold, because right now the gold is a safe haven against the dollar. If people are fleeing the dollar, they're going into gold because they're not going to go into another fiat currency from another country. You know, the dollar is the global reserve currency. There's no other fiat that someone's going to flee to. Gold is the obvious choice. Now, I want to run you through a bunch of these events here to show you, like, in real time, how we've seen the news events have their impact on the DXY and price of gold. Okay, so let me get my notes here. Okay, so again, this was Venezuela. So moving up, can you see my cursor on here? Yeah. All right, cool. So this was Venezuela here. You guys remember what happened here? Okay, this was Greenland. Remember when, this seems like forever ago, but this is right at January 20th right here. Trump started threatening to take over Greenland, started threatening tariffs again. Everyone was like, screw the US, screw the US dollar, we're getting out. We saw this huge sell-off, right? And that was that conflict. Then, if you remember, it was a Thursday night right here, Trump announced that Kevin Warsh was going to be appointed. And Kevin Warsh was looked at as a hawk. So that's good for the US dollar. He wants to cut spending. He wants to rein in QE. He wants to strengthen the dollar. So on his appointment, we saw DXY strengthen again, right? And then we saw the reports that maybe he's not as much of a hawk as everyone thinks. So we saw it kind of levelize out again. Then we were kind of chopping here. On this date right here, back on really February 13th, that's when the reports came out that Russia was going to start using US dollars for oil trade again, for energy trade. Okay, so people fleed out of gold and went back into the US dollar again. We saw it strengthen. Then, of course, we saw the Supreme Court ruling. So we saw this move. We saw this move wick all the way down to here. And then, of course, the reports that same day came out that said, oh, well, they have a backup plan for the tariffs. So overreaction, and then came back and then chopped a little bit. And then what did we see? The Iran strike. And then here we are back up. And now we're back in this range here. And the question is, where do we go from here? But I want to show you the exact opposite happened with gold. Right? We saw the we moved into Venezuela. We saw the Greenland tariffs. Here's the Greenland tariffs. Remember when DXY was losing value? Well, that's when gold was surging up. And then the Warsh announcement caused that huge sell-off, right? We're seeing the same thing. I mean, we see all of those that we saw at DXY. We're seeing the exact opposite thing with the price of gold. So you can see how these news events, we moved into Iran. We saw the sell-off in gold. Now we're seeing it surge back up. Why are we seeing it surge back up is the question today. Well, I think there's a couple of things out there, and this is something that I want to talk about because this is something I think I'm planning on playing as a gold long potentially if we see these reports come to fruition. Number one is, this kind of coincides with what we saw with, he said, won't be the global reserve currency for long at this rate. Yeah, I mean, question is, what other currency is going to be? We'll see. I agree, though. I think the way that the US dollar, the track we're on right now, we won't be the global reserve currency forever. And there are certain things we can do to speed that process up if we want. There's things that can be done, too, to slow that. But there's never been, a dynasty that's lasted forever. We're in this. I'm actually reading a book right now about the short-term and the long-term debt cycles and how empires fall. And I think inevitably, it's going to happen. It's just a question of when. But here's, I think, the news today that's causing gold to surge a bit. I think there's a couple of things, but there are reports, and this kind of is the same thing we saw with the tariff announcement, right? when the Supreme Court ruled against Trump's tariffs, we saw gold move up in a big way and people started fleeing from the dollar. And, the reason is, number one, the expectation is that we were going to generate revenue and that could help us decrease spending in our deficit. The other big part, though, is in those negotiations, a lot of countries pledged investment into the U.S. and that strengthened the U.S. dollar. What we're seeing here with this Iran conflict is that 3 of the 4 Gulf countries, Saudi Arabia, UAE, Kuwait, Qatar, are talking about pulling out and backing out of those pledges of investment into the U.S. And you're talking about a couple $1 trillion. Okay. These reports started surfacing this morning. I would imagine that if we see official announcements from any of these countries come out that they're going to be backing out of these trade deals, any official announcement, gold is going to move up. And that is something I'm looking at absolutely opening up a long on if that happens. The other thing, you've probably seen this one by now. Apparently, Russia has been providing Iran targeting information to attack America and giving them the locations of where our ships are. And I think that on one end, that's like, okay, that's an escalation. But it also goes to show that if you remember when Russia seemed like maybe they're starting to become a little bit more friendly with the U.S. and using U.S. dollars for energy trade, and we saw how that impacted gold, right? Price of gold went down. I actually shorted that day on that news, made a nice return on that. U.S. dollar index went up. Well, now we're seeing this report, and we're like, maybe those reports were a little bit exaggerated. So yet another reason to move back into gold and out of the U.S. dollar. And now we're seeing this news that China might be providing financial assistance and missile components to Iran. And if they get involved in this whole thing, and we do see that this is verified, guys, I think that we could see a bigger move out of the U.S. dollar, DXY drop, and gold move up again. Okay, so those are things I'm absolutely paying attention to on the gold front. So we talked about oil, right? As things come to a resolution, oil prices will come down. Look at the airlines. You can look at shorting oil through that 2x short on that ETF that we covered. We're going through the history of dollar here, though, like understanding how the strength of the dollar plays with gold, in oil trade, and how oil is so interconnected with all of this. And I think these events are things to pay attention to potentially open up a gold long. Of course, the question is, when it comes to the stock market and crypto, what are we seeing? Well, we know oil prices are up. That's a big problem for the Fed and for the US right now and for markets in general. I mean, the stock market and crypto, especially because oil has a very direct correlation with inflation. And it makes sense. Manufacturing requires oil. Oil's in most of the products we use in our lives. Did you know that there's roughly 7 gallons of oil for every vehicle tire? And then gasoline. Everything has to be shipped. Think about transit. Everything you use in your life, there's gasoline that was required to get that to its in location. So there's a very strong correlation between oil prices and inflation. Why does that matter? Well, we know that the Fed has a dual mandate. If inflation is high, they can't cut rates, but that's only part of the equation. The other part of the equation is the job market. And this is something that a lot of people were perplexed on today. They're like, well, in the past, last 6 months or so, when we see job reports come in under expectations, in other words, the job market's worse than expected, we've seen the market rally. And everyone's like, what the hell is going on here? Well, it's because there's that dual mandate. The Fed has to balance the job market and inflation. If the job market is poor, that means that they need to do something to stimulate the economy. Of course, that would be cutting rates. But they're in this conundrum right now because they have inflation running hot now. And oil prices are up. That's a big freaking problem for the Fed. They can't afford to cut rates because that can push inflation higher. So they're stuck in the middle right now. And I think that's what the markets are looking at. And they're like, well, yeah, the job market, the job numbers came in poor, and not just poor, they came in horrible, by the way. The jobs fell 92,000 compared to an estimate of 50,000. Look at this chart. Look what we're seeing here. This is the job creation. Obviously, it had been slowing down. But guys, this is bad. There's a lot of negative prints in there. Now, certainly it is worth noting that there's been a lot of deportations. So, those are jobs that became vacant that can be filled. And it's not necessarily looked at as job creation. Okay. So that's fair. But I think it's safe to say that the job market is pretty damn weak right now, guys. And I think that is where people are, reacting to this news. Whereas in the past, they're like, hey, job market came in a little bit weak. That means more rate cuts. That's good for risk on assets and for the stock market. Now they're like, shit, man, inflation's running hot. Oil prices are going through the roof. The job market is not just bad, it's horrible. And they're like, what's going to take precedent here? Well, I think it's very fair to see what the market thinks. This is the prediction market's talking about how many more Fed cuts there will be this year. The likelihood of having 2 or 3 is dropping off a cliff. So I think it's safe to say people are more concerned about inflation right now than the job market. And not only that, but the job market numbers came in so bad that now people are worried about a freaking recession. Look at this spike. Talk about risk off, man. Risk off, risk off. And that is a big reason why we see Bitcoin doing what it's doing here, dropping off a cliff. And I actually want to talk about this a little bit because I've had some good trades, but I also want to talk about a stop loss I put in that got triggered the other night. So I've talked about this a lot. It's like, look, when we move above 72,000 as a key level, I'm going to open up along. If we break above 74,000, which is the real level I'm looking at, then I'll open up a heavier position. Well, sure enough, I open up my long above 72. I put a stop loss slightly below 72. I was like, if this thing fails, that way I'm covered. Well, I went to bed. I woke up in the morning and I got stopped out. Okay. And this is it's so important to use stop losses. But I was a little bit frustrated at the time. So I'm like, man, what the hell? It literally wicked down to where I had my stop loss set, closed my position, and then moved back up. And I was like, this is bullshit. I was like, what is this? And the time was like all the way back up to 73. I was like, this is ridiculous. I was like, well, I'm going to touch grass then. If we move above 74, I'll look at longing. But I'll tell you what, if we move back below 72, I'm going to open up a short again. Sure enough, we did. So right at 71.8, I opened up a short, and that shit is absolutely printing. I'm on a couple different platforms. They're up over 200% today on that short. So just goes to show, right? Stop losses are really important. I was hoping for a breakout. It did win above the key level. It did everything I was hoping for. It didn't work out, but the stop loss minimized my loss by closing out that position for a very minimal loss. I was able to then re-enter on the downside and make a ton of money on that. So stop losses are super important. Oh man, it's like storming outside in Chicago. I didn't even realize that. But I'll tell you what, guys, I'm not trading Ethereum right now. I'm not trading Solana. I'm not trading gold. If we see some of those news reports come out, I'll move into a gold position probably. But for now, I'm just keeping this Bitcoin short open because the longer this thing gets drawn out with Iran, I think there's more downside ahead. I think there's a high likelihood of that happening. So I did cash out like 20% of my position because it was up so much and I just wanted to lock in some profits, but I'm letting the rest ride for now. We'll see how the weekend plays out. Things can change quickly. So obviously you have to keep your head on a swivel. But we're seeing the same thing in the stock market. Stock market's kind of falling off as well. It makes sense, with oil prices up, the Fed being in this conundrum, we have the job market numbers as bad as they are. People are a little bit risk off right now. Now, things change, obviously, once we start coming to a resolution, once peace talks begin. Keeping a close eye on those prediction markets because I do want to play oil to the downside. I want to play those airline stocks. I think that we will see crypto and risk on assets rally as well when we start to see that come to a head. But right now, it looks like this shit could go into the summer. So until we see otherwise, that's how we have to play it. Let me see what comments we have before we get into the AI agents. Hopefully, you guys are enjoying the show. I know we're covering a lot today. It won't last long. It's a matter of fact, matter of time before nations hedge against the U.S. Plenty of other fiat systems available. Yeah, but like which fiat system? I mean, I guess people could go to the euro, I suppose, but where I think this is going to play out is someone's going to introduce a gold standard again of some sort. There's rumors. I mean, China's been buying a ton of gold. Actually, the U.S., interestingly, just brokered a huge deal to buy a bunch of gold from Venezuela. Central banks all over the world are stocking up on gold. There's a rumor that BRICS Plus is creating something called the unit. I put a video out about this a while ago. It's basically a combination of all the BRICS currencies, and then 40%, I think it's 30 or 40% of it will be backed by gold. So I think that someone's going to have to go back to hard money at some point. Hard money meaning that's backed by actually something and not just, the government saying, hey, like we're here. The US dollar is backed by the military, obviously, but I think that there will be a shift at some point. That's the question. He says, the US dollar will always be the world currency. We are too powerful. We can force countries to take our currency. Brother, for now, yes. I'm not saying this is going to change tomorrow. But eventually, I think people are going to get tired of our shit, man. And it's a big problem for the U.S. If countries stop buying up our debt, and we turn into a situation like Japan has right now, right, where Japan's bank, the Bank of Japan, is actually printing up yen to buy up their treasuries they were doing this for a long time to force yields down. Because if no one's buying your treasury, you have to keep raising rates to entice people to buy your treasuries. If we lose those buyers, the foreign buyers, it's a big problem for the U.S. Now, it's worth noting, U.S. or the foreign buyers, aside from China, have all increased their purchases of U.S. treasuries over the last year. So it's not like an issue right now. Everyone's like, saying it's this huge thing. It's not yet, and not at all, actually. But it doesn't mean it can't become one. He says you can't force countries forever. Guys, I mean, people get fed up, y'all. I mean, that's why like the US dollar is still used for roughly 67% of international transactions and international trade. But that number has been dropping. Like China and Russia are transacting in their own currencies. We're seeing a lot of this where other countries are starting to go outside of the BRICS payment system. And I'll tell you what, as we get blockchain more adopted around the world, the US dollar is not going to be as necessary for a lot of these, these international payments. We've been fortunate that SWIFT is using US dollars in almost all transactions, but blockchain is going to change a lot of this stuff. That's a big reason why, by the way, that this crypto legislation is so important for the US. We need buyers of our debt. Yes, foreign buyers have been stepping up to the plate, but we have like $9 trillion of debt that's due this year in the next 12 months. It's because we've been forcing our debt to the short end of the spectrum. In other words, instead of using like 30-year bonds to finance our debt, we've been doing it on 1 year or less treasury bills. And I think a big reason for that is because we didn't want to sell a bunch of 30-year bonds while rates are up. Because if you remember back in 2022, Jerome Powell raised rates drastically to fight inflation. We don't want to be stuck with those interest payments, right, on those 30-year bonds. So what we've been doing is moving more and more to the short end, to treasury bills, which are much lower interest rates. But the hope and the goal is that rates will come down, and then we can start to shift back towards the 30 and the 20 year as rates are lower, and then our interest expenses won't be so high. But that's a big reason why this crypto legislation is so important, because the stablecoin issuers have to buy treasury bills to back up their stablecoins. They become a sizable buyer of treasury bills in the US debt. The same thing they're doing with their banking system with deregulation. They're changing the SLR, supplemental leverage ratio, which basically enables our banks to hold unlimited treasuries. It's no longer a net negative for them to hold treasuries. So we are finding ways to do it, but we've had to be a little bit creative. I think that's the big reason why Trump is pushing so hard on this Clarity Act, because the stable coin, the Genius Act, will increase the amount of stable coins out there. But without the Clarity Act, I think the Clarity Act, I was looking it up, can do like 4 to 5 times as much as far as how many stable coins come on. That means 4 to 5 times as much buying our treasuries and financing our debt. So it's all kind of connected. Let's see. What other comments? What do I want to pull up here? If the U.S. debt bubble, man, we just talked about that. You're right. I mean, every other country screwed that too. China's in a horrible spot right now. China on top of everything else. So they're not necessarily in great shape either. Said, I have some deepened projects I want to increase my stake in, but hope they go down to your target prices. Looking forward to AI agents. Yeah, interesting. Okay. All right, let's get into AI agents. These are the ones I've been tracking for a little while now. And you can see there's been quite a pullback. Not the Amber Vibe. Take that out of there. Really, these top 5. So these are the times that I look to add, is when we have pullbacks in the market. As things recover, I think these are the ones that pop off. We saw this, right? We saw the big pullback after the original Iran situation last weekend. Then we saw these things pump like 40, 50, 60%. And now we're seeing a little bit of a pullback again. So Bobby says that I feel like AI agent tokens are the new meme coin of 2026. To an extent, yes. Okay, so the reason why I'm covering AI agents, because if you remember back in 2024 and into 2025 a bit, the meme coins were really the alpha, right? That's where a lot of the attention was, and a lot of the money was flowing. At first, I fought it in 2024 because I was like, you know what, this is freaking stupid, and these deepened projects are really building, and like, screw meme coins, blah blah blah. And then I realized, you know what, it doesn't mean that I can't make some money off of it. Like, I want to come with a more well-rounded strategy. I hate meme coins, but I was like, there's money to be made here. Certainly, I made as much off freaking a couple of meme coins than I did off all of my deepened investments, even at their heights. Okay, so came out ahead. So I was like, you know what, I need to always have 5 or 10% of my portfolio, crypto portfolio, that I'm willing to look at where the alpha is at the moment. I think right now it is AI agents, right? So I would agree with you there. That said, I think it's important to, just like I did with the meme coins and finding ones that were very successful, finding which AI agents are going to be successful. 99.99% of them are literally meme coins that just have an AI agent attached to them. And maybe they have an X account that automatically sends out tweets but aren't doing anything. These are quite different. Kelly, Claude, Felix, Juno, Oso, Atlas Forge, they all, if you look at their profiles, not only are they growing, but they all have doxed devs that's listed in their profile. All these guys are cracked out devs, man. They're freaking smart. And they all have huge followings. A lot of them were never in crypto at all, and they're using it just because that makes sense for payment rails for AI agents. He says 99% of people investing in meme coins lose money. That's 100% right. It's more than 99%, I think, actually. The statistics behind that were terrible. I feel fortunate to come out ahead. But all that said, like, these are actually, so Kelly Claude is making apps and launching them in the App Store and generating revenue. Felix has its own shop of AI agents that it's generating revenue, and they have dashboards that show you the revenue they're generating. Juno's helping launch AI agents for businesses. Oso is the MetaMask dev that's basically creating the scope for payment layers for AI agents, because they're going to have access to crypto wallets. need to have scope on what they can access, what they can't, for how long, etc. And this Atlas Forge one is the one I'm going to highlight today. It's kind of interesting, but it's creating generative art. It's an AI agent that's creating NFT collections and artwork collections. So that's one I'm going to highlight today. But all of these I have exposure to, and all of these have done very well. And generally on these pullbacks is when I tend to look at these projects. I'm going to just refresh this here, see how much more they've dropped. And they're up a little bit now. So Kelly Cloud's at 6 million, Felix at 3.4 million, Juno's at 1.7 million, OSA's at 612,000, and Atlas Forge is only 191,000. So let's talk about this one a little bit. Follower count's been increasing. You'll see here, you see all these. It's a doxed dev here. So this guy, Johnny Miller, he's got 19,000 followers. A lot of them, their devs are 60,000 plus. By the way, a couple of these were mentioned on stage by Jesse Pollock when I was in ETH Denver. They're also getting on some big platforms, man. Like they're getting interviewed on Bankless. They're getting interviewed on some big YouTube channels. So this is like the real shit that's taking place with AI agents, not the other stuff that the meme coin rappers. This one in particular is fascinating to me. So yesterday it launched this Everything is Compute generative art. It's a 1 of 1 in the collection, 0.01 ETH. This thing, obviously, this sold out like instantly. Here's the collection here. Again, this is a freaking AI agent creating generative art. Generative art is a real thing. That's something that I spend a lot of time on, but I think there's an opportunity potentially here. This guy snagged it, has it listed for 5 ETH right now. Doesn't mean it's going to sell, but I will say there's another one, and this is a 50 of 50 set. So you had to, if you were a token holder of the Atlas Forge token, you could qualify for this pre-mint, and it was a 50 of 50 set. You look at here, it is right here is the set. Let this thing load up real quick. So you can read the history of the set. It's pretty fascinating stuff. And then this one right now. So this one went for 0.03 each piece. The floor right now is 0.3 ETH. So they've been selling. So 10 times what the floor was on the original mint. I may have minted a couple. And you see like this interaction, like people are saying, this is the equivalent of CryptoPunks, but for AI. I don't know about all that, but I do think it's very interesting and fascinating. And now this AI agent's using its trading fees to buy the floor of its own collection. So I'm like, what the hell? This is pretty wild. The big thing though is like, look, it's sitting at 193,000 market cap. So you look at it compared to these other ones, if they continue to sell out their generative art sets, I mean, I think that this is a potential play here. So there's one that on the dips I've been adding a little bit to. And I've got positions in all of these, and I've been trying to just add during dips like this, and maybe we'll see a bigger dip over the weekend. So that was kind of what you're asking here. Like, do you buy these AI agents now or do you wait? I don't know, man. I mean, keep in mind, these are higher out on the risk curve for sure, but it is where the alpha is today. Some big accounts are covering these things now. Base, the official Base account's been retweeting these things. And you can look at the dashboard. I mean, they're generating revenue that's growing. These other ones are also, burning tokens, just like you see with like DePIN with that revenue they're generating. So it's fascinating because they can build apps and they can do these things faster than a human can. So that flywheel impact, I mean, they're starting to even hire other AI agents to have on their staff. I mean, it's freaking crazy. This one, by the way, let me go back to this page here. This Atlas Forge in his first 1 of 1 set, he actually gifted it to Felix. So you have AI agents like gifting each other artwork and stuff. I mean, it's freaking nuts. But it's the whole thing, man. Like I think a lot of these I got in super early, like Atlas Forge, where it's at right now, it's market cap. I've got into a lot of these at around that market cap, and they've done quite well. So something to certainly keep an eye on at least. And I know there's some other ones out there, but I would say those are the only ones I'm interested in. I'm not interested in playing the virtuals ecosystem anymore because it's really, in my estimation, it's been a bunch of BS. Like there's not a whole lot going on there. It's really just launching these AI agents that are officially glorified meme coins. But those 5 in particular, I am interested in have holdings in. Let's move into DePIN. He said, in the last 2 weeks, I've built a ton of tools around GeoNet with AI agents. That's freaking badass. That's cool. I like that. I'm going to talk about GeoNet today. I'm going to go through a handful of projects here just to kind of update on the DePIN side of things. Helium's usage growth has been wild. So it's up 60.7% quarter over quarter. Helium mobile signups are up 29.1%. Hotspot's only up 5.6%. You might think, well, how is this possible? So Amir, of course, the CEO of Helium, mentioned this, that their offload partners were getting better data now, and they could get better insights into the value they were getting out of Helium's deployments. A good sign, I would say, is that they increased their spend. So they were very happy with the results they were getting. And that's a big reason why, while the hotspot deployments are only up 5.6%, the spend is up a lot. So these offload partners are finding real value in what they're getting out of Helium and increasing the amount that they're spending. So that's really good news for Helium. You also see here that they partner with this Mambo Wi-Fi. Actually, you might know something about this, huh? Because Brazil here, but they are launching carrier offload in Brazil, bringing 40,000 access points into the network. So this is a huge deal. They obviously announced earlier, like last year, that they're doing some work in Mexico. So they are certainly branching out. Now, I don't know what these carriers are willing to pay in these other countries, probably not as much as the US, but it is expansion nonetheless, and international expansion. So that's freaking awesome, man. That's a really big deal. The other thing I'll say is that Helium did launch a new dashboard. So you can see here, you can create accounts for you or host using only an email. So no more seed phrases, split hotspot rewards using QR code. So there's a number of things you can do here, but that's pretty freaking cool. So something to certainly keep an eye on. Getting ahead of me, man. Getting ahead of me. I'm covering that on GeoNet, but that is a big deal, GeoNet. But here's Helium, $1.18. Guys, this was right here, was right at 80 cents, or I think it was like 76 cents, somewhere in that range. That marked the bottom. I mean, it was right when Amir made that announcement that the offload partners are going to increase their spend and be less conservative with the new data points. That marked the bottom of H&T, and we've seen quite a run ever since. Obviously, the market's been shit the last, I don't know. We saw a little bit of a resurgence here, but then it retraced pretty quickly. So pretty solid. We'll see how it goes. Talking about something we're seeing in the war right now. Iran is attacking data centers, man. They're going after them. They know why. I mean, like, you think this one, they attacked the AWS one first. Now they're attacking a Microsoft data center. But it says the Azure platform runs operational backbone of NATO, U.S. Department of Defense, and every Western financial institution that has expanded into the Gulf in the last 5 years. So they're purposely going after these data centers. I mean, it's pretty smart, actually. So that kind of crosses over to something with Akash network, right? These decentralized compute protocols. You don't have to worry about a centralized location getting struck. So I think, off narrative alone, that could potentially be a play, but especially as we start to see the energy constraints on the grid become an issue, I think we could see some of these decentralized compute platforms bounce back. They just announced Burn and Mint Equilibrium as well, and are tapping into the AI agent scene. We have 375 AI, another interview. We had Quez on the happy hour last night. He's like, man, some of the conversations, some of the companies we're talking to right now about the data is freaking nuts. And they're really just getting started, but they also have their situation with Target right now and Kind Bars that they're doing the beta test on. I spoke with Harry a little bit about the things they're working on, and man, I mean, they have the connections as well as the wherewithal. I think they're in the right place at the right time. As there's a request, as data is going to be so valuable for these AI algorithms, man, and being able to have data that no one else has is really going to give you an edge. I mean, that the amount of data, the demand for data and real world data is going to increase significantly. Sitting at 1.718 cents. So we saw a couple dips here, got eaten up right away. Obviously, the low was 0.008, so we're up over 100% since that. So just been DCAing, baby. Waiting for that one. Here's the GeoNet. GeoSwarm hits Kickstarter. So you guys are talking about that in the comments. So they are doing a fully autonomous drone in a box security system. Deploys, patrols, returns, recharges. Pretty freaking sweet, man. So you know what's funny? I was looking at this drone. Actually, here's the actual page for it right here. So you can go in there, you put in your email and sign up for this. I was going to say, I hadn't busted my drone out in a while. I was like, it looks a lot like my drone, man. I got this Mavic 2 Pro. This thing's badass. It's a freaking cool drone. Looks very similar to DJI's, but I'll tell you this much. There's a huge opportunity for GeoNet here because he said that they need to focus on the core project. Well, it is separate, right? It is like Mike's other company. But they're going to have the GeoNet chip integrated into it. And here's why it's such a big deal and why I agree with them focusing on this. They're about to cut off DJI drones. DJI has the biggest market share, and it's not even close globally. The government's cutting off DJI because they've been using these drones to steal info and steal data and spy on us for a long time. So there's a huge opportunity for someone to fill that gap. I was asking Mike, I got dinner with him in Denver, and I was asking him about it. And I was like, is there a chance that they push out this restriction? He's like, yeah. He's like, but they could speed it up too. He's like, they want to make sure that someone can meet the needs of the drone industry. And he's like, there's a massive opportunity right here. So imagine if they can fill in that gap. They don't have to fill in it all the way, but they can backfill this huge void that's going to be left behind from DJI. Then they have the chip integrated. They could sell it as a package. Like, hey, set up your GeoNet unit. You know, if you're a farmer in agriculture, whatever, and this drone will be able to connect automatically. And the drone service space is absolutely exploding. So that's why I think they're pouncing on this opportunity. So there is a lot of potential revenue there and a lot of usage for the GeoNet network that could be pretty seamlessly integrated. So pretty exciting stuff with what they're doing there. GeoNet token, just chugging along, man. I mean, it hasn't really just been chop. Obviously, you saw our all-time high, and then we see a bounce. I mean, it just hasn't. It's not down as much as a lot of the other ones, though. I'll say that much. But you know, nothing's been super pretty. But I think that is one that could do pretty well. Worth noting, it's sitting at a $53 million market cap. There is a lot of dilution this year, so okay, you got to keep that in mind as far as where upside could be. That's why I think for me, there's a lot more upside potential with something like 375 AI that's sitting at under a $4 million market cap versus something like GeoNet. I actually would argue that selling data is much easier, and the total addressable market is likely larger, actually. But GeoNet's a very solid project with plenty of upside, no doubt. Obviously, he's not a fan of Akash. Yeah, it's fair. I mean, look, Akash did well off of hype in the past, but I will say, like, they've got real revenue now. They're meeting a need. They have a burn equilibrium to add utility to the token. So it's one of those projects that, like, yeah, I wouldn't have been interested in investing in it probably even 6 months ago. But with the recent changes they've had, and I think them meeting a real need, it's something that now I'm like, okay, I would look at it. Again, it's like a $90 million market cap. So keep that in mind. Like, what's the upside look like? Yeah. It's not as much as one of these, projects that's sitting under 5 million. you're not gonna get 100x out of Akash. Maybe you get a 5x. A lot of it depends on market conditions too. But these ones that are under 5 million, dude, that's how you can get 10, 20, 50, 100x, which I've done many times in this space. But you have to have a low market cap to get there, right? You have to look at the upcoming dilution. So Rover announced that they have their new model they're releasing now. It's pretty slick, man, with what they're doing with their data, I have to say. I think their data is going to be valuable. They have some contracts. Market cap's low, super low, 766,000 now. They've got a lot of dilution coming up, though. And actually, I don't know if this is accurate because it's CoinGecko and CoinMarketCap too is kind of guilty of this. But when you have unlocks, if they don't move out of the wallet that they're unlocked from, it's not treated as circulating supply. So they've had unlocks, but they're still sitting in those original wallets. So I think this market cap is higher. Said it's cooked. Earnings are too low. I'm a little. The unlocks are pretty aggressive right now. I will say though, they're tied to Horton. I don't think you have to worry about like the team dumping tokens, right? We've seen that with other projects, so it's not a concern of mine. But people are still going to see the market cap and be like, yeah, it's getting up there a little bit potentially. The bigger problem to me is that I think they're paying out way too much to deployers. There are people that were getting like 3-week paybacks, or less at a certain point in time, and you see this issue where they just sell. A lot of these people are selling and pushing the price down. To your point, there's not enough revenue to offset that. So yeah, that's a big problem with a lot of these early stage projects. There's not enough revenue, and they're too heavy on the dilution and the community rewards. You got too much flowing out. It's like a boat that's got water coming in and the revenue is taking the water out. It's not happening fast enough, man. You start sinking. It's not enough to maintain people mapping for the price of the hardware. But if you're breaking even in, what's your break even point? At the current price. But here's the issue though. Like if they had, I think early on when the price was at like 1 cent, I know people were breaking even pretty fast. They could have probably decreased those payouts at that point. And people still would have had a really good ROI, and the token price probably wouldn't be as low as it is today because there wouldn't be as much sell pressure from all those rewards being given out. So now they're kind of in this position where they're a little bit stuck, right? There's a halving event coming up in April, so that'll cut down on some of the emissions. But now the token price is down. There's not enough revenue to prop it back up, and I think that early dilution I think the ROI and the early dilution was a little bit too aggressive early, and now the token price is down. So they got to kind of hope that the market turns around. I like what they're doing, but now they're in kind of a tough spot. It's kind of like what we've seen with HiveMapper. Let's talk about Auki. They have their first pilot with a Norwegian company. So they've set up 10 stores in 4 days with 2 people. That's freaking impressive, man. That was always like my concern is how quickly can they get these things set up? These because it's hard. If you're working with these retail locations, getting them to set up a new platform that they're going to be utilizing day to day and kind of rolling that out it can be difficult, but this is an impressive rollout. So they continue to execute there. Really like what Auki's doing. Currently sitting at $39.9 million market cap. They're on the verge of being profitable here. So that's something that is going to be important. For these a lot of these deep in projects just rely on their early investment money, and they're just kind of draining down with the hopes that their token will appreciate and that eventually they'll have revenue. That game's not going to work, man. And this year, I'm talking to founders, they're like, good luck raising capital in deep in this year. The crypto market's so shot right now. So any of these projects that don't have adequate runway are going to be in big trouble. So the fact that Aoki is on the verge of having enough revenue to offset their burn rate is pretty remarkable. Talk about a couple more here. How did Hivemapper get 32 million another round of seed funding in late 2025? Well, I don't know all the details. And I don't know that was all funding at once. So I don't know that was 32 million that came through at the end of 2025. And I will tell you, I've talked to a lot of founders across DePIN over the last couple of months, and getting funding is incredibly difficult. Okay. So I'll leave it at that. Again, I don't know all the minute details, what Hivemapper's funding round looked like, but I don't think that was necessarily all at once. I think that was probably funding over a period of time. David Warwick is talking about Glow. They are closing the funding gap on solar projects. He said for there's a 40-to-1 subsidy effectiveness ratio. So for every $1 subsidy, $40 of net new solar is built. So they are doing quite well. This can be compared to an estimated 1.5 effectiveness ratio for U.S. solar subsidies. We talked about this in a 4 effectiveness for German. So we talked about this a little bit last night in the DePIN Happy Hour. One of the big problems with tax credits, in particular what the U.S. had for solar, is that it's a 30% tax credit. So these companies were enticed to increase the cost of the system to be able to get a bigger tax credit. And what David Warwick's doing with Glow is they're coming in and they're bringing incentive to close the gap. So these are projects that maybe were really close to getting their solar project funded, but just didn't get across the finish line. They're stepping in to kind of bring in a little bit of extra capital to get it there. And by doing so, they're able to get these solar projects built, and they've been able to really capitalize on that minute amount of funding. They just had another solar farm get built today, another solar install. And if you look at their token, guys, it's not on CoinMarketCap, it's not on CoinGecko yet. And I was talking to David at ETH Denver. He's like, we're going to start marketing it. He's like, we really just wanted to kind of get things going, get things off the ground. They've got 107 solar installations now under their belt. Again, they're not the ones installing. They're bringing the financing to these solar companies that, they're professionals. They do this every day. They're not getting in the weeds on that. I mean, they vet them extensively, obviously, but they're just helping close that financing gap. And their token, by the way, when I covered this originally a week ago, 6.5 million. So already up, what is it, like 10% since last week? And at 7.4 million, I would argue it's probably pretty undervalued still, but worth taking a look at. Today, the only way to buy it is through the liquidity pool on their website, but I believe it is Solana based. Boom. Spexy, if you're a drone pilot, they are moving to stablecoin payments. They were doing credit card or they're doing like debit payments. They're retiring Stripe and they're moving over to USDC directly in the Spexy app. So that's pretty sweet. They will end up launching a token at some point, but right now, like they've got revenue coming in, they're paying out USDC, and it's been very effective for them. And that brings me to next week. I am having their COO on, Alec, for the Tuesday space. I met them out at ETH Denver. Freaking awesome stuff, man. They're doing some cool stuff with drones and mapping. I think they have a chance to be very successful. They got some big opportunities in their pipeline right now for this data. The following week, I will have David Warwick with Glow on to talk about what they're doing for solar. So that will be March 17th. Of course, that is St. Patrick's Day. And then this coming Tuesday, March 10th, I'll have Spexy on. So those will be exciting. And that's what I got for the show today, man. That was quite a show. Let's see here. Let me answer some questions. Yeah, Spexy does have a GeoNet partnership. It's actually funny because that's why I went over to their happy hours, guys. I got dinner with Mike and he's like, hey, I'm going to head over to this event. You want to come? I'm like, so we hopped in an Uber over there. That's how I met the Spexy team. So they do have a partnership. I don't know the full extent of it and what it means, but I know they do have a partnership. Is solar, nuclear the future? Both, brother. Both are. If you look at, let me pull this up actually. Look at how China's kicking our ass right now in energy production. It's pretty sad. Pretty sad, but I think both are going to be instrumental. Let me see which one of these is the one. Oh, yeah, here we go. So instead of the worldview, let me share this tab here. Let's look at China. Like, look at what China's doing. Of course, they're horrible with coal, but they're increasing across the board, right? They've got nuclear, hydropower, wind, solar. And if you look at how many nuclear plants they have planned and are in the planning process and are being built, it's crazy. The U.S. has a lot that's in the hopper now. They're being proposed. So they're scaling up as well. And Trump's even put an executive order in on that. But I do want to show you something too. And just to highlight how big of a problem this is with us versus China. Production by country. Is this the one? I don't know if that's the one. I don't want to buy source. I want total production. There we go. This is what I'm looking for. Maybe. Yeah, this is what I was looking for. Let me pull this up for you guys to show you how big of an issue this is for the U.S. This is energy production total. You can see, there's all this talk about the energy grid and the AI race and how China may have already won because of this. Guys, like China's electric grid has been expanding now for the better part of the last 2 decades. They've put a lot of time and effort into this. We are way behind. This is a huge problem for the U.S. And this is why I think energy plays are going to be very interesting, where you can really capitalize on nuclear, on solar, on natural gas. And these are going to be not short-term plays, but I mean, these are going to pay off dividends for an extended period of time, probably over the next decade. We're going to see a lot of investment into those different resources. And I think there's going to be actually like government funding that goes towards this stuff too. So let's go back here. Hold on one second. Said that today, Western Union launched stablecoin on Solana. How's Solana not ripping with Firedancer, with Phantom Cash? You don't need Coinbase anymore. You can, yeah, it's interesting. I accidentally moved some shit into Phantom Cash the other day. I was like, what the hell is this? I like accidentally stumbled across that. Yeah, Western Union. That news was out quite a while ago that they're moving to blockchain. I don't know if they specified Solana or not. But here's the deal, man. Like, the market conditions are awful. It's really hard to get a pump off anything. Now, in a bull run, that probably would have spurred, a lot of money to flow into Solana. But I mean, look at its market cap. It's pretty high. There's 7%, I believe, inflation per year. It is being utilized a lot, and I think that the value will go up over time. But right now, the market conditions just are not going to create any big pumps, unfortunately. Chirp. I haven't really covered Chirp. I don't really do anything on Sui. And maybe I'm missing out there. I don't know. But to me, like, I really only cover the ones that I'm invested in, and I don't have to necessarily hit everything. And I have a hard time understanding why like Base and Solana are where all like a lot of the buildings taking place. Like these other L1s, like fine, but I just wonder how sustainable they are. And maybe that's wrong. I mean, I can be convinced otherwise, but that's just kind of how I look at it right now. We've seen a lot of layer ones try to become relevant, and they are for a period, but like how much building's really taking place versus those other chains, I don't know. I think you can get to $1,000 at some point. Question is when? Probably the next market cycle. I don't know. We'll see. It did this cycle though. It went from it got to 240, and then in the last market cycle, it got to like 296. I think this market cycle. So now, would we have gotten higher if Trump didn't launch his meme coins and threaten tariffs every other week? Maybe, maybe. We were back on. We are on track to freaking go bananas. I mean, yeah, I think at the end of September it's $250, and then October 10th happened. Binance screwed everybody. It is what it is, man. But I think eventually it could get to 1,000. I agree. Just got to keep getting adoption, keep getting builders. You know. Oh, what else do we have here, man? It's 420. What? Let's see. Who's squeezing fun bags? I'm not going to put that up there. What else we got here? I think we got most of the comments, guys. That's what I got, man. We went through a lot. We went through the oil trade. We went through ways to play oil going up, going down. We talked about the history of the US dollar and how that interjects with the strength of the dollar and gold, and what we're seeing right now with Iran and with Venezuela. Talked about the job reports and why this time was different for crypto and the way it's reacting, and went into AI agents, went through the DePIN update. Man, that was a good show. Let's go. That's what I got for you guys, though. So hopefully everyone has a fantastic weekend. Make sure to like and share, subscribe to my channel if you haven't already. I'll catch you all next time. Peace.